Recording as well.
Sure, it's recording.
So have you connected that to Facebook Live?
Yes, sir, going live and
We have Hemant as well. Hi, Hemant. Good morning.
Hi Dheeraj, good morning and good morning everyone. I'm Hemant.
Hi, Hemant.
Hemant, you might have to start your video now. We'll be starting in 1 minute time. So all of you need to be
Sure.
ready with your video on.
so guys, we're going
So
live.
Dheeraj, I'll be going off on the video. All of you take over, please.
Sure. Govind, are you on? Yeah, Govind is on.
Yes, hi Dheeraj, good morning.
Good morning. Pranavi, all set? We should start?
Yes, sir.
Just enable the speaker view so that anytime a speaker is speaking, that screen comes up, everything else, goes at the back end automatically.
Okay, how to do that?
Top right, you would see it on your app.
Speaker view is enabled, sir, already.
Chaliye, theek hai, done.
Okay, so we are going live in.
Okay.
So already, shall we go live?
Yes, please enable.
Sure.
Yes. Good morning, everybody. Thank you for joining on this beautiful Sunday morning. I welcome you to RegTech 2020 Risk and Regulations in Innovation Ecosystem webinar brought to you by SucSEED Indovation Ventures and Hyderabad FinTech Forum. SucSEED Indovation is the sponsor and investment manager of SucSEED Investment Fund, a SEBI registered angel fund. Hyderabad FinTech Forum is a community initiative to connect various stakeholders in the fintech innovation system. As you all aware, SucSEED has came out with a research report recently on opportunities in India RegTech sector, which is available on SucSEED Innovation's website. Just to give perspective before I welcome the panelists. Globally, RegTech market is a $55 billion business, growing at 50 to 55% CAGR. But majority stake of the market is in with the US, UK, and Canada. India is still is a nascent state, but at number 4, growing very rapidly. The last year investment in Indian RegTech sector grew 5 times that what was in 2018. So it's a pretty exciting space to be in. And to discuss more on that, on touching the report briefly and the RegTech opportunities and various insights and opportunities and processes and systems and how does the market look and what are the challenges. We have our esteemed panelists, and I have the honor to welcome and introduce Govind, Ritesh, and Hemant to this discussion. Govind is a co-founder and CEO of SignalX, an AI-enabled due diligence search engine company based out of Hyderabad. It runs comprehensive financial, legal, and compliance reputational risk analysis for many companies. Govind has done his mechanical engineering and minor economics from IIT Hyderabad. Previously, he built a mobile-first enterprise SaaS solutions and with Nebulae, which was helping businesses managing their partners' network. Welcome, Govind, to the session.
Thanks, Dheeraj.
Ritesh, welcome to the webinar. Ritesh is the direct tax practice partner of Indus Law, Bangalore. He's a chartered accountant. He was working with EY in past, has very diverse exposure in direct taxations and regulatory matters, focusing on taxation planning, structuring litigations. He has appeared on behalf of the clients before the CBDT, NCLT, and various courts. Welcome, Ritesh, to the webinar. We look
Thank
forward
you, Dheeraj.
to get
Thank
more
you. My
insights.
pleasure.
Hemant is an accomplished due diligence, financial crime compliance as anti-money laundering and KYC professional working with international banks. He is skilled in international regulatory compliances, risk management, risk assessment and mitigation. He says he is fascinated with blockchain, RegTech, and FinTech, with in-depth knowledge in blockchain implementations and adhering to the international regulations and investigation. Welcome Hemant to the webinar. We will come on behalf of
Thanks,
SucSEED
Dheeraj.
FinTech Forum. Yeah, so as a end user, as a lawyer, and as an investor in this setup, this sector, there are the first questions come to my mind is the RegTech. Is sometimes very much synonymous with the what we have been seeing in AML and the fraud management. And majority of that market is basically in US and UK. Right. So how do you perceive that? How is the understanding correct, or what we can do, what the Indian market can do to learn from there and understand more and grow more here? I think I'll come to Hemant first because he has been dealing with the international, working with international banks and handling those issues, and then we'll understand from him how the Indian context works, and then come to Ritesh and Govind, because Govind is the guy who will be probably enabling it for a lot of Indian clients. So Hemant, the question first is to you.
Yeah, sure. So I will give like an international flavor to it because I'm not familiar with Indian banks and regulations. So there's a lot of investments in RegTech, and to the matter the process improvements as well. So it will start with process improvements, like you identify some idea, and they'll start working on it if it is relevant or not. Once it is once the panelists say if that idea is good and if it is good to go, then it will start that that budgeting will start, how much we need to get investment in our like current tools what they have. So once it is have, so there's a lot of investments in RegTech process improvements, because so when you see a KYC process, because KYC process is a very effective way to mitigate all this terrorism financing or money laundering, because if you see, I mean, like if you see any, like if you see this number of red flags appearing on a bank or anything, so it will start from front office. So front office uh, is a gateway, like they only report 2 to 3%, or I can say whatever the red flags or STRs have been reported to RBI or FIUs. So it has been from the front office. So so I mean, like, so the reporting system, so all the transaction what we have in terms of transaction monitoring or transaction screening system, so all those happen when transaction is already completed and everything is happened. But KYC function is in the initial stage is a very important. Why I'm stressing so much in KYC and like front office is, like that is where we, the bank or financial institution, or to the matter small NBFIs or small financial institution, have a chance to, like stop uh, onboarding a customer. So having said that, so we need to have all the banks have a very like a rule based like like KYC systems. They don't have very like integrated systems, what you call. For example, rule based is like they set up a rule threshold, and whatever triggers it, it will be the red flag. So they just follow a traditional based uh, tools instead of having implementing AI. So it must be a combination of artificial intelligence or kind of a RegTech tools. So we should not focus on only on AI will help us, or to the matter nowadays you might hearing a lot of analytics. I mean, like behavior analytics. So it is also, it's a combination of each and everything to stop or mitigate. We can't completely stop it, but we should have adequate tools. Or instead of having a traditional based tools, we should have a like a combination of artificial intelligence or RegTech or data analytics. Because you name I don't think all the banks have been fined by like RBI. So there is no bank which is not fined. I'm sure on it, because you know and also it all depends the data. So it's all depends the data, how a bank is managing, or how how tools, or how fast technology they are adopting it. But still I see there are a lot of investments in RegTech, artificial intelligence, but there is so they need to leverage their data. So they are sitting on large amount of data. They need not to have any like, they need to leverage that data, existing data they have. They collect the data from customers, or they have data in terms of transactions. So all kind of data they have to leverage it. And once they leverage it, I think they can mitigate the chances of having levying fines by their respective regulators. So I'm
So
open with.
Miss, I understand from you that right now the RegTech is majorly focused on the AML KYC piece.
Correct. Yes.
But I'm sure I'm sure RegTech has more
Yes.
to it. Not only the AML because that's the that's the initial
Initial.
focus.
Yes.
Later on, a lot of things comes into it. So I think I'll go to Ritesh and see. Is it the focus on the AML and KYC is because of it is the it is the initial process, or because of the lot of US banks and the UK banks are in India, and we are focusing on that based on the business rather than on the because we are not covering the complete gamut of RegTech when we are only talking about AML and KYC.
Yeah.
Ritesh?
Yeah, you're right, Dheeraj. I don't think one can restrict the scope of RegTech only to AML or KYC. Of course, as we've seen the industry pick up, these have been the two popular use cases, and India at some level leading the way globally with with the Aadhaar project, and following that with a whole host of regulatory announcements that make KYC, at least today, very simple. And all of those regulatory announcements, the matter of implementation has been through using technology. And if you sort of step back a few years ago, Dheeraj, you will realize that, including regulators like RBI, they would send us Excel macro-enabled sheets in which we were required to first comply with data. And
True.
beginning from that era to, starting to talk to companies about workflow automation, and then banks looking at continuous monitoring, today I think we've evolved to a state where we are also able to at some level look at predictive analysis, right? I think that's the next wave, because like Hemant said, AML red flags as defined from the rules are, that's the only point in time when you sort of get a red flag. But I think the more crucial part of RegTech is going to be when technology enabled by AI is going to be able to predict issues, right? When you start seeing a certain pattern, when you start seeing a certain flow, I think that's really the next wave. And I think, to that extent, if you look at Indian market per se, uh, SEBI, RBI, IRDA, all of them have been very welcoming of a regulatory sandbox. And to that extent, that openness to use technology to solve regulatory issues is now building in.
Correct.
And in my mind, the most crucial factor for the success of RegTech industry is how you will partner with regulators. The idea is to see how we can supplement a regulator's thought to implement it in a manner that is easy for business, rather than having technology that can help you work along in a different way. So I think that's where the Indian RegTech space has to evolve. Of course, data privacy regulations will play their own role. We've seen RBI starting to regulate some of these RegTech businesses. For example, the account aggregators in India now have specified norms issued by RBI. So there will be those instances, and therefore it's extremely crucial that we partner with the regulators in the right way, and sort of build the ecosystem in a more positive way towards achieving a common goal.
Sure, sure. So my question still remains that, the focus more is, on the US market, or, on the US companies.
Yeah.
Probably they are the more mature market, and they are, the globally RegTech market in US, is $55 billion, which, but 75-85% coming from those market. India is still growing space. So we'll circle back on this question again, in the later part of the discussion. Govind, I come back to you. You are the guy, you are the company who is, working on that solution, for the Indian market, we would like to hear from you what is your perspective? How big is the Indian market you are considering, or you are still you are also focusing on the US market to tap? Because India is still is a very very big market, and it is just in nascent stage. Starting in last 2-3 years to focus on the RegTech sector.
Yes. So Dheeraj, there are two. I mean, if I may, when I look at RegTech, I look at two items. One is regulatory compliance, and the second is internal compliance of companies, right? I mean, increasingly enterprises are creating or actively looking at their internal compliance policies, which comes under the GRC space, which is a governance, risk, and compliance, which are policies defined by enterprises and businesses to manage their internal and external businesses. And of course, the second part of this is the regulatory compliance itself. So one of the items that we need to understand here is the cost of non-compliance, both internal and regulatory. So in an ecosystem like the US or the European countries, the cost of non-compliance is very steep, and the cost of non-compliance in India is also increasing, both internally and regulatory.
Sorry to interrupt. Your voice is a little unclear, little bit cracking in between.
Okay, I hope. Okay, I hope this. Yeah, can you hear me now?
Yeah, this is better.
Yes. So, Dheeraj, I was saying, one of the underlying aspects of this RegTech adoption is the cost of non-compliance, right? I mean, what is the penalty to pay for not being compliant with internal processes and also external processes? So, internal compliance, costs are coming up, by means of recognizing business loss because of non-compliance with internal parties, which could be, let's say, tying up with vendors or tying up with counterparties, could be, who could cause certain.
We lost you.
Govind, there are two connections. Can you unmute it from the second connection? Because your voice is not coming from this screen.
Is this better now? I'm sorry.
Yeah, I think that's why there is an echo at your end.
Better now, I guess. Yes. So, so the cost of non-compliance is actually, one of the items that we. I'm sorry. This is actually, I have to mute this. I have to talk from the other device. Yeah. So that is one area, where we can look at. So now, given certain recent regulatory acts, like for example, one of the acts, like for example, IBC for that matter, the bankruptcy code which has been put in place since 2016. So for businesses to participate in the act as a resolution applicant, for example, for them to come in and acquire or propose resolution to distressed assets, if they themselves are not compliant, or their counterparties are not compliant, or their related connected entities are not compliant, they stand to pay the price for it because they become ineligible to participate in those processes. So this is one of the many items that are going on. So what I believe is that internally, within the country, the cost of non-compliance is being increasingly recognized, both from an internal GRC point of view and also from a regulator point of view. So this is opening up a new wave of applications and solution providers that are required, which can help the businesses to mitigate these kind of risks. Yeah.
Sure. So I still could not get the clear answer to why is this over focus on the US market. But what I could gather from all of you is that I know US market where the regulatory system is much more matured and the risk reward system is much more higher. Ritesh, is it the correct understanding that under the US law you are focused more on the compliances and on the fulfilling the regulatory requirements because their penalty is much more higher and much more faster, and in India there is still those systems are developing. Is it the correct and it is the correct understanding?
Yeah, you're right, Dheeraj. To a very large extent, if you compare the US and India in terms of the regulatory action, in terms of the sanctions and the SEC issuing orders, I think it's very robust. It's very punitive. So the fear of facing actions like those, in the US or in the other economies, is something that pushes people towards actually making compliance done. In India, though, we have started seeing early trends of such strict actions by the regulators. If you look at the Sahara matter, which went up to the Supreme Court, I think that was uh, that is one landmark in that sense. The messaging saying we have to be serious about running compliant businesses, and followed that, at least from a tax perspective, we are seeing a lot of follow-up action on GST, particularly where there is a mismatch of credit, there is under compliance, and equally on the withholding tax side. So all in all, if you look at it, the focus on India is now going up in terms of compliance, and the way people are reacting to it is that compliance is necessary, unlike the earlier thinking. So that's the piece on development. And you're right, US is scarier than India is today. So people are looking forward to immediate compliance. So when you speak to banks particularly, they have internal code of conducts, they have AML policies, which are way more stringent than what the Indian regulations may require. And those, originate from the SEC and, the possible actions that the SEC may take if there was a non-compliant identified. Yeah, so you're right there, Dheeraj.
Sure. So that brings me to the next question. That how the corporates are evolving, how the corporates are innovating. There are two parts of it. One is that the actual use of the corporates, are they willing to spend that extra bucks on the RegTech compliance packages or the services which the new companies are providing, and are they also helping the product companies to develop it and improve it. So I'll come to Govind first because he has perhaps the first user experience, because he has been selling his products and services to the corporates, and also he's also working with corporates and firms like management consulting firms to improve on his product. So Govind, up to your voice has a lot of echo. If you can reduce it, we will it will be good, beneficial for all of us who are joining this conversation.
Yes, I'm just trying to do that, Dheeraj.
Okay.
Yes, I mean, one of the recent trends in the corporate side is, of course, adoption of GRC policy, which is coming up very fast. So in recent, we have internal compliance units which are being recognized as a core part of business, primarily because there is an increasing cost of non-compliance, which is to the vendors, it could be businesses which have global exposure today. If they are engaging with non-compliant parties in India, there is a scope of where business is getting affected globally because of global regulator watch. So businesses that are cross-border are increasingly looking at their compliances in local domains like India, and also increasingly given the financial sector explosion, where we have a lot of NBFCs and other entities that are playing in the field. They are also increasingly aware of what is what kind of internal compliance or code of conduct that they have to put in place so that they don't get punitive damages from the regulator. curiosity about what kind of customer qualification criteria that has been met, etc. So as things are going more digital, as regulators are being more observant, corporates are sharpening their internal compliance programs by means of the GRC practitioners that they're employing internally. And also because of the changes in the financial sector, where we have more players today, from the NBFC side, etc., and they're also actively seeking, solutions that will help them manage, certain compliance activities internally. So yes, so we see a lot of pickup, and also businesses, enterprises are aware that if they are non-compliant, they get, and if they are a global business with exposure to more regulated markets like the US and Europe, they get penalized for non-compliance in India as well. And so that is also driving more and more demand.
Sure, understood. So I'll come to Ritesh next, because Ritesh is, in a position to advise a lot of his large clients where the stake is much higher compared to the smaller companies. And what are your suggestions to your clients, Ritesh, in terms of involving the RegTech innovations for your clients, and what is your what are your suggestions, and how do you see that growing, and that behavior moving from the large clients to the smaller and mid MSMEs and mid segment companies?
Yeah, I think one thing consistently that we've been seeing is clients are today wanting to talk to us about how can they ease compliance. First, how can they achieve compliance, and how can they ease compliance using technology? So this is, fortunately been a space where we've seen clients come to us rather than we having to take this out as a solution, because the general consciousness about compliance and the increasing sophistication of law, and as it has evolved, some of which even Govind pointed out too, I think has led to a thinking where people are now beginning to have compliance, not because it's a check the box, but because they start feeling it's important. I think that change in the mindset, I think has had a tremendous impact on the GRC market, and in also in terms of the adaptation of technology. So, to your specific question, I think the trend has been reversed. The clients are now interested in finding out if there are solutions, if there are tools, because today nobody wants to be in a tug of war with a regulator, especially on
Right.
matters of compliance.
And how do you see that behavior, from change, moving from large clients to the smaller clients, or startups, for example, or the MSMEs? How do you see that trend? Do you see the trend moving there as well?
Yeah, we are seeing trends moving there as well. Again, very early stage startups, because of lack of awareness, they may not, they may not be fully there. But as they start to mature, closing Series A, Series B, of course, there, I think they've become very conscious, right? So they're saying it's okay to spend a little, so long as we are in compliance and we are in the good side of the regulators' books, we're good to go. So yeah, the trend has been across promoter-driven businesses who are MSMEs or even larger than MSMEs have now started to focus on it.
Sure.
I think the one cause, like I said, the one point that is driving change uniformly is also the concerted action, right? All regulators nationally, globally, have made compliance a very big, mandate, and use of technology has made it so much more easier. So long as there is no business disruption, people are more than happy to do it today.
Great, that understood. I'll go back to Hemant. Hemant is somebody who is, who is in India, working for US bank, and probably he can give us the perspective of both the worlds. How they are. He is seeing from the, sitting in India from the US perspective. Is there an increased pressure on him? Seeing in the Indian operations should be more compliant and should be, no tolerance kind of a, guidelines which has come to you, Hemant?
Sorry, I'm on mute.
Yeah.
Okay. So to compare, like US regulations, or to the matter, European regulations versus Indian regulations, it is totally different. There are two different worlds. Like when you say, when you, I mean, like if you working in a KYC or transaction monitoring, the tone is set up from the senior management. So you need to be compliant, and you have regular training, quarterly trainings. So saying that to know familiarization of your roles and responsibilities. What are you responsible? What is your, if you are non-compliant, like non-compliance, what is what will be the consequences? You will mean like you will be fined, or your job will be terminated, depends upon the nature of the act you do against the policies. So it's totally different worlds. Like the US markets or regulations are very stringent when compared to India. So India is like Indian regulators are like a damage control policy. They follow it because, for example, I will tell you, like in the recent week also I heard RBI has penalized few public sector banks. So when like the amount of penalty is also like 25 lakhs or 30 lakhs for each bank. So that is like why they are doing, you might be hearing some like many cases in 6 to 1 year in the across in India, because you know FAT, I mean, like our country is is pending for mutual evaluation. So that's why RBI is like is just showing the FATF, stating that yeah, we are being compliant and we are being finding the bank, instead of the catching the criminals. They are, their job is easy to just find the bank. That is also very small in terms of small fines. So that's just showing the FATF that we are being compliant. So it makes us the mutual evaluation process very easy, and then if they can pass, everything is set. And if any regulator or international body raising questions on our regulatory reforms, then again this finding picture will comes in picture and everything, because from the bottom level they
Saying
don't.
Indian regulators are more reactive in nature.
No, it is like a damage control policy they follow. The, I mean, like the definition of damage control is when where they were, I mean, like if there is a sound like the regulatory reforms in India is not meeting the global standards, they start reacting. Yeah, they'll start penalizing the uh, like government banks or private sector banks, like from 25 lakhs to 1 CR. That's it, they will become silent. Or else they will catch hold of one or two people, they showcase media. That's it, silent. But when you see the US regulator, the fine is very heavy. I mean, like in terms of I mean, like being non-compliant, and also senior management, the CEO or the chief compliance officer will be being removed, or their license will also get removed. So I mean, like
What
the
you're saying is that globally the regulators are probably more mature, and and their risk and reward is very high. Indian
very,
regulators are still to catch up on that.
yeah, it is like we should avoid like a damage control. So you see
Understood.
uh,
So that brings me to the next question, where so we have seen there is a market, there is an opportunity, there is a gap, and then there are corporates and startups who are coming into it and working it. There are role played by people like Ritesh, who is advising his large clients, medium, mid-sized clients, saying, hey, this is the this is the compliance and this is the cost. You take a call whether you want to have the compliance or you want to have the cost later on. And that's bring to the second question. And the next question for me is, are the regulators open? Are the regulators getting involved into it? What are, how you see it, Ritesh? I'll come to you first. Are the regulator getting involved? Are the regulators
Yes.
asking you? Because I have seen most of the compliance are still on the paper, trailing, right? Most of the compliance are paper trail, despite of using. So there are a lot of opportunities available, and I'm sure it will grow from here. So, to you, Ritesh.
No, Dheeraj, absolutely right. I have to say, regulators are looking at this. Regulators are being very, very cooperative in that sense. But I guess the one thing is they are also being they're being committed, but with caution. They understand very well that the future is tech-driven compliances, but at the same time, they also understand that in India, the framework of using data and reporting data and the privacy of that data is not as strong as some of the other economies in the world are. So I think I give the regulators a lot of credit. They are very mature in handling some of these. While Hemant said that the penalties are small, yeah, I mean, to you it may look like a slap on the wrist, but the fact that today the RBI or the other regulators, I think SEBI has always been very, very active in this space, but even the other regulators who are picking up action or filing complaints and responding to complaints, if you see the trend generally, they are very, very awake of the issues. They are not, it's not like you're speaking to a wall anymore. And, if at all, I think I'll give the regulators a lot of credit because they are handling this with a lot of maturity. They are not being punitive because they recognize being punitive may kill the entire spirit of compliance. And to that extent, like I said, with caution, they are committed towards building this piece out. And this, Dheeraj, is all based on experience where, we've been talking to RBI on various matters, right? That could be some part in the policy which we think is difficult, some part in the policy which may not be commercially savvy. I think they've been all ears to us. And their simple point has been make sure what you do is transparent and compliant and we are with you.
Understood, understood. So I go back to Govind, on this conversation, because Govind is somebody who is giving a solution which is not only helping the corporates automizing or streamlining their compliances and the reporting, and also it is helping regulators to analyze the data, because that's also very important. That the old days where we used to file bunch of documents with ROC and SEBI and RBI in physical form, and probably they did not have the bandwidth and the manpower to go through them and to analyze it and to understand, is it going for a default, or this is it going for a non-compliance and all. But now the data is mostly going into the XBRL form where it's very easy to analyze. So Govind, what's your take on that? Are the regulator helping you in making the data easy readable? What is your views, and how the regulators are analyzing those data? If you can, if you have some ideas on that.
So a couple of developments recently on this field from the data point of view. I mean, the regulatory landscape is pretty big in India. So many different regulators.
We can't hear you, Govind, very clearly. Your voice is still coming from a little far off.
Just 1 second. Is this better now?
This is much.
Yes. So, couple of developments in this space, Dheeraj. I mean, as we know, the regulatory landscape is huge. There are so many regulators, regulating various functions, in the ecosystem. But increasingly, over the last 4 years, there has been a improved recognition of where the role that data has to play in all of this. Starting with, in fact, now the government has even created what they call as an information utility, which is the first time the government of India has even defined that term, what an information utility is and how an information utility has to be registered, and how compliance and regulatory professionals can use these information utilities to conduct the job. So, and also recently, just a couple of months back, where the Ministry of Corporate Affairs themselves were asking for organizations to build data models on top of the data that they're currently carrying to help them understand the scope of insolvency prediction, the scope of corporate governance, etc. So there are regulators, that are increasingly recognizing the role that data plays. And the government is also actively putting, in fact, since the last year, There are efforts that are going on because of primarily, because of the needs driven by the bankruptcy code to consolidate all regulated data into one place so that compliance professionals can use it and drive the acts that are in place. Like for various acts, starting from IBC, PMLA, and of course internal compliance requirements that the government has. So to make make the ecosystem a safer place to do business, which is part of the agenda for making it easy for businesses to set up and operate in India. It is required to have data utilities and information utilities that regulators and compliance professionals can very quickly use to assess. So we've seen a push by means of one, of course, creation of information utilities by the government. In fact, we only have one of them today, which is called the NESL. And of course, the government pushing for consolidating all of this information into one place. And even platforms like MCA and regulators like MCA looking to leverage the data that it carries to make use of it, to help compliance professionals understand things like corporate governance, etc. So, I mean, as a country, like, from it is of, my opinion that we have an insane amount of data that is available with the regulators. Many of them actually make the data openly available, starting from, MCA to even the customs to even the courts and, various regulators make the data available. So there is a push for information utilities. Government, regulators like MCA talking about predictive models for insolvency, prediction, etc., is a very big step, and that is actually a very forward-thinking, initiative that they are running. So we are very hopeful on how, what we think are regulators recognizing the importance of data, and and how that could be a very critical piece for future compliance and regulatory professionals.
And Dheeraj, if I may just add to what Govind said, we have seen a series of internal MOUs which are being signed by various regulators, Indian regulators, amongst themselves to share data that much more freely. And I think all of this will at one point culminate into one common data set identifying one individual or one corporate, from where, like Govind said, the information utility, something that consolidates everything and makes it extremely user friendly eventually.
Understood. So I think the more automation of data and more technology involvement in the reporting and the compliance happens, it will be easy for the regulator also to compile it and check the red flag. So in the beginning, rather than later, what Hemant has been complaining that obviously we can't compare the US regulator and US market and Indian market. Both are different world altogether. But yes, obviously the involvement and the openness of the regulators are very welcome and rapidly growing. India is a land of laws, but Ritesh knows it and everybody knows it that India has, I don't know, 6,000, 7,000 laws, which for even a single startup where you look at, you have 20, 30 law when you just have opened the business, so 20, 30 laws to comply with. So and obviously there's a different footing, ease of business ranking is growing, a lot of progressions is coming, but yeah, a lot of there are still a big way to go, and that's what we are here to discuss the opportunities. Because if there are gaps into the Indian regulatory system and the reporting and compliance management, people like Govind can come in and build a solution for that, and people like us who can benefited as an end user, as an investor, and the ecosystem develops as well, and then it grows. Like I was reading in the top 10 top 100 RegTech companies of the world, India has only 2 entries in that, and that was last year if I'm not wrong. So I'm sure going forward the numbers will increase. So that brings me to the next question, that obviously there are a lot of technology, innovation is happening. There are a lot of involvement is happening from the corporates, from the advisors, consultant, tax practitioners, lawyers, to the and the regulator. How do you see the burden of compliance, all in terms of the number of laws to be complied with, and also the cost associated with it growing? I'll come to Hemant first, because he has probably has the idea of both the worlds, and then I'll go to Ritesh, and then probably see Govind's view on how to minimize the cost and what can be built. So Hemant, to you, how do you
Okay.
see the cost of compliance, the burden of compliance changing over a period of time, and how do you look at it?
So to be honest, I mean, like no bank even want to invest in the resources in compliance, because because it's not a revenue generating. It's like honest answer.
Understood.
And and the compliance investment has to be grown, and because the reason is any financial institution, if you see whether it's like a very big bank in US, JP Morgan, or here any cooperative society bank, they are setting on lot of data which they gather from the customer, or they take it from the transaction analyst or thing. The only thing is how we need to use a particular bank, how you need to use that data with a combination of artificial intelligence or AI or analytics, or so it might be a combination of all these three. So every bank has to utilize these things to be it will push to be compliant instead of non-compliance and being penalized every year. So it is better they leverage the data they own, they already have it. It's
So
not
are you saying that the banks which has the data are
Mhm.
probably not intersharing
Using it.
others to, so if one bank knows X is a default or X is a red flag, and he does not share it with the other banks or other institutions, that's what you are suggesting,
No,
him.
I'm saying whatever data they have, they are not leveraging it. So they
Okay,
have like piles of data in terms of transaction messages, in terms of beneficial information, or any information, any minute information they are not utilizing with technology. So
understood. So
yeah.
I got your point. So I think I'll come to Ritesh now. And the burden, because ultimately the, if there is burden is more, and whether it is on the compliance side or the non-compliant side, the lawyers like Ritesh gets directly indirectly benefited, because clients comes to them either for managing the risks, or or if any regulatory action is happening because of the non-compliance, probably to get that adjudicated. So, Ritesh, to you.
Yeah, so Neeraj, I think the one recognition we all carry is India has been an entrepreneurial maverick, right? Starting from independence till now, we have, as entrepreneurial nation, we figured ways to do things, and that explains the numerous laws that you were referring to earlier. So I think it's more a consequence of our entrepreneurial thinking that has crafted this situation, and we are happy we are in this situation because we've been able to think so much more creatively. But having said that, really, if you look at what Hemant was saying, he's really talking about harnessing the potential of data in that sense of predictive analysis, and using that as a early detection or a tool for ensuring compliance, right? I think in my mind that's a very mature phase. The size of the country we are, the early teething problems that we deal with, I think it's extremely important that we also first get the right platform. Having data, having duplicative data, how do you resolve those challenges? How do you make it easy for people to give you data? I think those are the challenges we should now be talking about, because predictive analysis is something that I think is a little bit more in the future. At least another maybe 18 to 36 months is the timeline for it in my mind. In terms of accessing data, of course, today, with the account aggregators coming into the Indian financial ecosystem, to be able to access financial data across platforms by one agency is now available. So that again makes life very easy. So for banks to utilize the data at the time of granting loan approvals or credit card approvals, I think that bit of the process is definitely bound to get easier. But yeah, I mean that's pretty much where we are, Dheeraj. I think everybody is today preparing themselves to see what do I need? How do I get it? How do I make it easy on the regulator side? On the business side, people are saying, what do they need? How do I give it? How can I make sure my systems can automatically start giving this data out? So these are, perspectives on both sides of the table, really.
Sure, understood. And I think very calmly, put that, Ritesh, because they said it looks very, it looks very complicated, and it is very complicated, but you have put it, simply, in very calm, in a calming tone, So, I'm sure, congratulate your clients to have, advisors like you who can explain things, with this calmness. Govind, I come to you because you build the product, and and you see. Why would I purchase your product? If we have, if my cost is high, and my regulatory action will come, I don't know, maybe 2 years, 3 years later. So why would I do that? So how you are helping the businesses, ensuring that the compliance cost is much less?
So, Dheeraj, just wanted to add one more point to the earlier, conversation. One is one of the challenges of, the burden of compliance, right? Is that the regulators are all spread across, right? I mean, we have state level regulators, we have central, regulators collecting different kinds of data, and they of course don't talk to each other. And because of this, no one regulatory body can own any kind of a technology investment that they can make, which can be used across everybody else. So, I mean, everybody is very siloed. All the regulators are very siloed. So what this means is for businesses to stay compliant, I mean, they need to use platforms that are focused on consolidating regulatory data and making the investment on behalf of course, which not a single regulator will be able to do because they're all, working in silos. So that is one other challenge because there are state level compliances, there are, national, central government level, compliances, which is all, very siloed. So the other thing, Dheeraj, is one, we look at two kinds of users. I mean, one is we have enterprises, like, recently in 2019, so I mean, we had, I believe it was Infosys, where there was a bribery issue for which there was an SEC penalty because of an India-based, vendor that they had, engaged. So this actually causes, issues across their client base, across the organizations that they are catering to. And of course, I mean, enterprises are realizing that when you're working in a country like India, you also have to ensure that your local units are compliant so that your, entity that is in, registered in US don't get penalized and scrutinized by SEC. The second thing is the traditional businesses in India, like people in the cement and steel industry, etc. These are real estate businesses. These are traditional businesses. So one of the things that has happened in this space is the mergers and acquisition activity in India is now getting a little more organized thanks to the bankruptcy code, which was put in place for 2016, which is giving a formal platform for businesses to come in, acquire, or propose to restructure distressed assets. So one of the very key components of IBC is that if you are a non-compliant entity, you cannot participate in an insolvency process. So if you are, let's say, a traditional family business and you are looking to acquire or propose a resolution for an entity in your similar domain, you cannot walk into and apply as a resolution applicant unless you yourself are compliant. So we've seen a lot of family businesses that come on our platform and do a self-audit. So they are looking at whether their business is clean to a certain extent, which complies with the requirements from the IBC. So we have people who come on our platform do a self-audit before they go and talk to an insolvency professional. We have larger enterprises who are required now increasingly because of the global exposure of non-compliance. If a company which is of any repute is caught in a bribery or corruption issue in India, it spreads. Because just like us, just like Signalex, how we consolidate regulated data, we have platforms like LexisNexis and others who gather adverse media investigation data, which means if there is a bad reputation that is created in media today, it gets resonated across all of these databases. just like SignalX, across the globe. So there is an increasing visibility of non-compliance. So if you behave badly, it gets seen, and traditional businesses are now being required to stay compliant, because otherwise they're missing out on opportunities like this. And the compliance requirements in acts like IBC are so strict that even if you as an entity, as a traditional Indian business house, if you have a company that one of your directors or a shareholder is part of, which itself is non-compliant to some extent, you disqualify to be part of the insolvency process. So I mean, there is an increasing. Some of them are feeling the pinch. The global enterprises are feeling the pinch, and this is where, of course, there is a lot of advisory revenue by the big four, and of course the management consulting firms are growing because of the recognition by enterprises on for these issues. So SaaS platforms reduce the cost. You may not have to put in $100,000 building a team to really build it out for yourself. So SaaS has a role to play. Just to take a minute more, like for example, there are probably about 6,000 to 10,000 odd compliance requirements that any company, if we consolidate everything, pan India. And this itself is such a complex subject that, in fact, for us, we cannot consolidate. So we are asking users to create it on our platform. So that, if you are creating a due diligence checklist, someone else in the same space can also use that due diligence checklist to verify the companies that they are, consulting or advising. So initiatives like ours, because no single regulator may be able to own and invest the capital required to build out a technology that every compliance professional can use, that results in a gap where startups like mine can come in and play. And there is an increasing recognition of non-compliance, both from a global enterprise standpoint and also local family offices as well. And so that is giving a positive push, and I hope yes, it will pick up more momentum going forward.
Understood. So I think the consensus for everybody, and for a change, Hemant also agrees here that there are a lot of things required to be done, and a lot of scope and a lot of investments and a lot of evolvement has to happen here. In terms of the processes and how the India is looking at. Even for a startup, the compliance is important, because probably one of your investor is a foreign investor or an NRI investor who is joining you in an angel round or the next round, and probably he would like to not take any regulatory risk, however small it is. So and we have seen in many cases, coming from the startup ecosystem, we have seen in many cases where a lot of people join. So that brings to the I think we are almost reaching close to end to the session. One thing which is I will mix it with an audience question, is that what are the opportunities you see and Indian startups can bring in here in the RegTech sector? There are a lot of startups who are working. Do you see any evaluation what Tally did for the accounting, what do you call democratize the Tally did the democratization of the entire accounting system and the packages in one go, and it was like Tally become synonymous with the accounting. Do you see any startup doing something like that? I think I should come to Hemant first, take his view, then go to Ritesh, and Govind will probably have a biased answer to that, but we'll take that. Hemant.
So in terms of opportunities, we have a very good opportunities in India, particularly starting from training perspective. So like the training program in these regional banks or private banks or public sector banks, I mean, like they are doing on an annual purpose, but they have to do they have to be like tuned as per their roles. Like teller have this different set of training, and the CEO or compliance officer of training must be different. So like for example, I have started my own startup on like a edtech company as AML custodian, so which will deliver virtual training sessions in AML space.
Nice.
So there's a lot of opportunities in this space, particularly in India, in starting from training and then building up an AI platform for any particular bank, or to the matter to the AI or like enabled platform for regulators as well. For example, I can see there's a shortage of staff in FIU as well, in India FIU, because the amount of SAR they every bank is submitting, they don't have manpower or technology to analyze, like to analysis to those reports as well. So they handpick, like due to political motivation or anything. So that is a different topic. Yeah.
Ritesh, how do you see, since you are the end user, a customer, if I can say, of these products, whatever in the market, and also, advising the clients on what to use, how to use, what are the costs and what are the, risks and reward. How do you see the opportunities coming in, and what would you want as an end user? What would you love to see? Something like Tally. You think something like Tally would work on the RegTech space?
Uh, I think, Dheeraj, RegTech is the way forward, right? In my mind, there is no compromise on that, because people who are being careful, I mean, I've said it several times earlier in this discussion, the level of consciousness is increasing, and which is where products that Govind has built as a as a diligence tool, or for that matter valuation models, etc. I think those are really the future. If you look at if you look at some increasing or some recent trends, we've seen clients come and talk to us about doing some form of a diligence even before a term sheet is issued to a client, right, to a target. So pre-term sheet diligence, understanding if these guys are generally healthy before they even get approached by financial investors. I that's a big change, and that is where I see products like Signal X or Rule Zero, etc., making a big contribution. Right, they are making it accessible to people like us, and they price it very well so that it's not prohibitive for us to access them, and that changes your entire sentiment towards data and compliance. I think, therefore, in my mind, undoubtedly, that's the future.
Great, great. Govind, sorry, your take on this. I know you are, you're a vested, interested party into it. So, still,
No, I think all of us are, Dheeraj, because without products like those, I think we are going to go back a few years rather than moving forward.
I agree.
Yeah, agree. Agreed.
Very
Yes.
impressed with what Govind has built personally, because
Of course, of course, of course. Yeah,
very
yeah.
close to what I wanted. So, Govind, to you.
Yes, Dheeraj, I think, there are, because we cater to compliance professionals, one of the most important pieces of a solution that can be built by any business here is accessibility. How easy it is for them to get started and consolidate all of this information and make a judgment as to whether somebody is non-compliant or what are the gaps in their compliance system. So access the hard work of consolidating data and analyzing it has to be done in the backend, which is where these automation technologies like AI and others build a lot of bring a lot of value. Making it as simple as being able to sign up, place a start an investigation or place a name, and give out an entity and being able to run some analysis is very important. So access, ease of use is extremely important to reduce the barrier of effort it takes to get started with something. One of the things even platforms like Tally is how easy that these platforms made for certain functions to be done. So ease of use is going to be a very disruptive factor, like how easy it is for them to, for a user to really, start analyzing or make certain, arrive at certain judgments. The second thing, unlike Tally, because this is a RegTech site, auditability is very important, which is like when you are, using technology to make a judgment, there has to be a basis for it. There has to be certain trail for it, that you can preserve so that you as a compliance professional or a legal professional are secure that yes, you made the call based on certain data points that was made available. So auditability, ease of use, these are the two core components of the product values, that as we call it in our company, which are very important. And making it easy is a way to go. So that is, of course, helps a lot of users, and it will of course like help companies also to stay compliant. If you make it much easier, because the cost of compliance, the cost of non-compliance is growing. But SaaS platforms can of course decrease the barrier for the effort and cost that it would take to get started with a technology solution.
Point taken. So indirectly, you are saying that probably Tally, which was dealing with one accounting guidelines and accounting principles, was much easier to manage, and that's how it democratized the accounting systems and all. Probably in the RegTech, because of the vast nature and 6,000, 7,000 filings across the businesses are done for by one company, and a number of laws and all, probably you are indirectly saying that it may not be that easy, but yeah, it can be tried. That's what you're saying, Govind?
Yes, Dheeraj. And of course, technology has to make it easier for users to get this done. I mean, it is already hard by default, but tech interventions that make it easy, which are SaaS solutions, of course, have a big role to play.
Sure. I've got one another question from Asutosh in the audience, who is a technical question which can be answered later on. The relevant question for us is that why the government is pushing for one more database through as an information utility, where we have a lot of other regulators where the data are already filed and maintained. Ritesh, what are your views on that?
Sure, I think Dheeraj, the information utility serves a very different purpose, right? And yeah, I mean, I agree there may be data available, but what data is available is slightly more scattered. The information utility consolidates it, brings more data to the tables tomorrow, so that any financial process that you run, you are that much more informed about the decisions you're taking. So today, if you look at how a credit score gets computed, or how technology is being used for coming up to a lending decision, there are certain areas in which you could be left behind, right? So, for example, if I changed my mobile number, that unique identifier changes, and then the data point might be skewed. So, information utility will change all of that. The information utility will have more than one unique data points or unique data identifiers, which will make sure that the quality of data available is higher, and to that extent, the informed decision making process is being carried out, rather than decision making basis data available. So I think that's the next step in really data gathering and data dispensation.
Okay, so you're saying that's more of a complementary in nature. It's not an thing. So,
Yeah.
Asutosh, I hope you have you got answers to your question. It was a good session, guys. Thank you very much. We have got different perspective. RegTech is something which close to my heart, and and everybody's heart, because it has a lot of opportunities, a lot of challenges for sure, but a lot of advantages. I have played role of compliance officers in my previous roles, where the focus always has been to ensure that you are compliant, rather than facing a regulatory action, because that cost is much more than what the cost of being a compliant company is, or ensuring the compliance. So that was the perspective. We got views from Ritesh, who advises large clients to ensure that they are compliant at every stage, and later on also when there are some issues, probably how to solve it. We got Hemant, who was giving a different perspective between the US and India jurisdiction, and that global perception was important, because India is growing. India has got a lot of investments and a lot of much more higher stake from different jurisdictions, where the reputational loss for the company and for the jurisdiction is very important if anything goes wrong. So I have seen the jurisdictional issues on the aviation business, where the default from by Kingfisher and Paramount pushed the entire Indian aviation industry 4 or 5 years back, because there were some issues. So regulatory has a lot of scopes in terms of a lot of angles involved to it, being compliant and also pushing India as an destined investment jurisdiction, obviously that risk is also there. We heard Govind as well. Govind is building solutions to it and helping all of us, Hemant, Ritesh, and myself, and other investors and other professionals in the industry, building the product, starting it, and probably he will have more improvement to his product, which makes our life much more easier, and bring confidence of the investors and all. But that if the due diligence is carried on, or if the reporting is carried on by Signal X, it has more reliability on the data. Ritesh has been saying, or what Hemant has been saying. So thank you very much, guys, for the conversation, for 60-70 minutes of your time on a Sunday morning. Have a good weekend, good Sunday. Stay safe, and look forward to catch up more in future in detail on offline or online, whatever opportunities it bring. Govind, all the best to you. Hemant, all the best to you. Ritesh, pleasure talking to you. We'll be in touch.
Pleasure.
Thank
Yes,
you.
yes.
Thanks
you.
for organizing.
Thanks, everyone.
Thank you, Gaurav, for organizing this and hope managing at the back end.
Sure, sir.
Thank you. Bye.
Thank you.
Thank you, guys.